Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 31,684, down 3.34%. Ethereum currently trading at 1896, down 5.18%. USDC, the stablecoins, DAI, USDT, BUSD are red. That means money is flowing from these stablecoins into the crypto market. If you're new here, I'd just like to let you know that everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to be more of a financial blessing to yourself and those you love. Twice a day, I reach out to our community and I ask them if they have any things that they want to cover off in upcoming episodes. Crypto Cop reached out and said, what about this? What about central bank digital currencies? Would they make cryptocurrencies obsolete? This is really interesting, so let's dig in. I mentioned to the community that I was going to do a special on this, and I got all sorts of fascinating ideas, questions through Discord, through our Facebook group, through Twitter, and I'll do my best to answer those questions. Kekone64 also reached out with another article, the ECB to launch Digital Euro project. We are a very community-run station, channel. Everything I do for you is to help out in any way I can to make you more of a blessing to yourself financially and those you love. All of these articles can create some degree of anxiety, so I really want to get to the bottom of it and help you through understanding what's happening here. Before we get into the meat of it, Accenture did an analysis recently about the implementation, experimentation, research, and interest in central bank digital currencies throughout the world. We can see China has implemented the digital yuan. Twice a day, I reach out to our community and I ask them if they have any things that they want to cover off in upcoming episodes. Crypto Cop reached out and said, what about this? What about central bank digital currencies? Would they make cryptocurrencies obsolete? This is really interesting, so let's dig in. I mentioned to the community that I was going to do a special on this, and I got all sorts of fascinating ideas, questions through Discord, through our Facebook group, through Twitter, and I'll do my best to answer those questions. Kekone64 also reached out with another article, the ECB to launch Digital Euro project. We are a very community-run station, channel. Everything I do for you is to help out in any way I can to make you more of a blessing to yourself financially and those you love. All of these articles can create some degree of anxiety, so I really want to get to the bottom of it and help you through understanding what's happening here. Before we get into the meat of it, Accenture did an analysis recently about the implementation, experimentation, research, and interest in central bank digital currencies throughout the world. We can see China has implemented the digital yuan, and it's been doing digital payments for years, really, through WhatsApp. This may help. According to a survey, 92% of people in China's larger cities use WeChat, Pay or Alipay to do their payment. Basically, the government in China wants to use the digital yuan. Now let's return to this particular article and do a quick analysis on it. The Federal Reserve Chairman Jerome Powell did in fact say you wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital US currency. I think that's one of the strong arguments in its favor. That was an answer to Representative Stephen Lynch's statement that perhaps the Federal Reserve should act more rapidly in creating a central bank digital currency to cut down on the hundreds, perhaps thousands of cryptocurrencies being currently launched. It's probably helpful to know that there are 10,901 cryptos currently. So what does a stable coin look like? Because that's what really central bank digital currencies are seeking to create. You can see this incredible performance from July 2015 right up until the current date. Stable coins, central bank digital currencies, are fiat proxies, basically. There is another use for them, and I'll talk about that a little bit later. So how does this all fit in? I just put a little diagram in for you to try and help. The conventional banking system, in order to get money into crypto exchanges, requires an on-ramp where that money is converted to a digital equivalent. Now, what happens traditionally is that, for example, I'm in Australia, so I would take Australian dollars and send it to Binance. It would sit on the exchange at Binance, and I could convert it into a stable coin such as USDT, USDC, BUSD, or DAI, or anything, if I wanted to maintain a balance in that. Say I wanted to buy Matic, I would need to find a seller that wanted Australian dollars, because that's what I have in my account. I want to buy Matic. The seller wants Australian dollars. There is always a thing called liquidity in markets. If I buy in Australian dollars, that could be in a liquid market. Now, what does that mean? A liquid means I get really bad prices. So I always would convert into one of these stable coins, depending on the use case. BUSD is a Binance stablecoin. I actually use USDT, and I know there's a bit of an issue with Tether at the moment, but that is the predominant stablecoin by market capitalization and liquidity. So I convert my Australian dollars to USDT, and then I want to buy Matic. So I find a pair, Matic USDT, and I drill into that, and I get a depth chart, and I get the buys and the sells here. Now, I could have also converted the Australian dollars into BUSD, BNB, to, if I had Bitcoin, I could buy Matic with that. I could buy it straight from the Aussie dollars. I could buy it from BRL, Euro, Great British Pounds, all sorts of things. You can do incredible things with crypto. But the issue is, once I buy it at spot, so I would put a spot order in here. If I wanted to buy at market, I don't go for what people are selling here. I go for the lowest level if I want to absolutely buy something. But that's not how I buy. I buy at support. Now pretend I bought Matic. Now I own Matic. If I want to sell Matic, I have to pick a pair that I want to convert back to in either a coin or a stable coin. It could be Bitcoin. It could be so many things. You can see so many pairs here. I can just play with it if I wish. Or if I wish to convert it back to Aussie dollars, I can do that too. I hope this explains a little bit about the mechanism. Let's have a look into the top stablecoin tokens by market cap. Tether is the most liquid, followed by USD coin, which is kind of just around under half. Binance USD, you can see the difference in liquidity between Tether USD and Binance USD. DAI, Terra, True USD, Paxos. Now, the interesting thing is the price tends to remain around the dollar. The issue with stablecoins is they typically are pegged, and the difference is how they are pegged. And you can see as we go down, it's basically a dollar. But hang on a sec, this one, Status Euro, is not a dollar. And this one, VI, that's not a dollar. And this one, Steam Dollars, is a stable coin, but it's not stable at all. You can see it's wildly fluctuating. When you get deeper and deeper into the engine, you understand that things that are said really need to be fact-checked. I've just done a quick thing here. I've just looked at Tether, and I know some people really despise Tether, and I understand why. However, it is on exchanges. Look at all these pairs that you can get. You can use Tether to buy all sorts of different things. There are literally, now I'm just going to go faster because there's literally thousands of pairs that you can buy through all sorts of exchanges and dexes. I'd just like to give you access to this really fantastic article. It's from aimultiple.com/CBDC. You can just simply put this into Google, Central Bank Digital Currency CBDC In-Depth Guide in 2021. It's a very, very good article. It has a lot of good stuff in it. It explains how central bank digital currencies can work, retail, for example, banknotes, and wholesale between transactions of digital currency between different organizations, pros and cons of digital currency, all sorts of things. But I want to go back to the questions that were raised previously. The first important question is, would a CBDC actually make cryptocurrencies obsolete? What do you think? If you look at the stablecoin, if it's a central bank digital currency, it's just a conversion of, in my opinion, of say US dollar to a digital US dollar. And of course, it's controlled differently than currency. It's more traceable. But how does it compare to Bitcoin? Answer, it doesn't. How does it compare to Ethereum? Answer, it doesn't. Stablecoins are exactly that. Central bank digital currencies are really a stable coin, at least in their first, second, third iterations. Kekone64 was kind enough to share this, the ECB to launch the Digital Euro project. What is it? What's a digital euro? I've just basically gone into that article and just extracted the key points for you. It's a claim against the ECB, like banknotes and coins, but in digital format. It probably represents an online bank account with the ECB rather than a commercial institution. The ECB can't run out of money. But when do we expect to see this? Well, not for half a decade or so. So you can see even the prime movers are a long way off. Now, how does this realistically impact cryptocurrencies? Guess what it does? It accelerates adoption. Now you say, Ken, how could a central bank digital currency accelerate adoption? There's so many people around the world that think crypto is a Ponzi scheme, it's a scam, and we know in this industry it's not, but a lot of people don't. As soon as central banks talk about introducing CBDCs, they'll say to people, hey, it's all right, it's all digital. And then what happens? The floodgates to mass adoption open. So just answering a few quick questions. Will CBDCs take stablecoin status in the future? It'll just be one stablecoin, absolutely. Will the central banks be able to block people converting their crypto into fiat, into the CBDCs? Possibly. That's certainly what China is attempting to do. And China can do that because of its government structure. But democracies operate a little bit differently. Do you think Bitcoin and CBDCs have a place together? Absolutely, they're totally different, as we talked about. CBDCs won't have a limit, just like fiat. What's the difference between fiat and CBDCs? Fiat, we know that the majority of fiat is actually digital anyway. CBDCs are completely digital. This is a really, really good point from Chaudhry. I suppose to make it better for government, they will be programmable and trackable. Excellent point. Absolutely. William Fogg said, will CBDCs run on decentralized blockchains? That means open ledgers where people can see your account balance. Guess what? Nah, of course not. People know this already. So CBDCs, Quant, said they're programmable money. You can automate payments once certain criteria are met. Absolutely. They're a phenomenal thing that will speed up the financial system. Simmers said, what do you think about the possibility of governments creating their own digital currency? Yeah, they're looking at it, as you see from the Accenture. Will they push out other cryptos? No, absolutely not. They may curtail certain cryptos that are in direct, I guess, competition with them, but they won't push them out. I don't even believe that. This one from Kekone, are central banks purposefully bypassing commercial banks? No, they're working together with them. They can't do that. The commercial banks are really, really powerful. And Quan, again, very excellent discussions. We have these discussions all the time across Twitter and Facebook and Discord. So, they will not be issued on the public ledger? Absolutely. They could be distributed privately on private ledgers? Absolutely. I hope that's answered the question. I know a lot of people are really, really worried about that. Let's go into Rule 174, trend, which we covered in the video episode before this one, timing and trigger, which is this episode. The first thing we do is take a quick news sentiment analysis. Bitcoin miners eye nuclear option. Wow, that sounds pretty interesting. That sounds a bit explosive. Bitcoin network node counts. Okay, well that seems very positive. Don't forget, we look at the news headlines as though we're an investor that knows nothing about crypto whatsoever. You also know, if you've been with the channel for a while, that news headlines can be incredibly misleading. Okay, how Bitcoin can help the poor and in developing nations. Wow, that's pretty cool. Launches crypto, yes, that's positive. Struggles, that's negative. Steve likens Bitcoin to gold. Wow, that's positive. Mnuchin, if people want to buy Bitcoin, it's fine. Wow, that's positive. There's a but. But anyway, we ignore that. One of Canada's largest Bitcoin mining farms sees a 50% jump. Wow, that's pretty cool. Bitcoin may have played a role in Tesla's decorrelation. Ooh, that sounds pretty interesting. What's that about? We're so busy we don't have time to look at it. Okay, Bitcoin millionaire. Wow. Eric at 22. Fantastic. Mainly positive stories. In episode 126, Bitcoin was trading at 32,859. Bitcoin is currently trading at 31,739, just underneath that structural was support, now resistance. Now, what is happening here, we have to look at contextually. I'll explain a little bit more, but the real thing is the trend. If you watch the previous episode 126, you'll know that the trend is strong, but you have to know why this trend is strong. If you don't know that, you'll be shaken out of your position. Bitcoin has support underneath its current price at 31,111. It also has support at the 30,500 mark. It has resistance above at that structural resistance line of 32,414 and 32,834. Let's have a peep and see how the longs measured in green and how the shorts are behaving. This is what we want. This is what we've been waiting for, the shorts to enter the market because they feel psychological safety. What happens when the longs enter the market and feel psychological safety? We'll look at that a bit later on. This is all very positive. Let's have a look at the Ethereum longs measured in green and the Ethereum shorts measured in red. We can see that the longs in Ethereum just dropped off a cliff, and we can see a reduction in the shorts as well. This is a really interesting pattern. We need to dig deeper into this to understand what is happening. Let's have a look at Bitcoin options expiring at the end of the month, which has the most open interest. We can see the maxpain price, where the majority of options expire worthless, is still at 36,000. It's been at 36,000 for as long as we've been reporting on maxpain. Let's have a look at Ethereum open interest. We can see maxpain is still at 2,400 for the end of the month options expiration. It hasn't changed. We see something really interesting in terms of the breakdown of calls, which are longs, call up, and puts, which are down, which are shorts. The calls were larger in the last episode, and the puts have grown. It's very interesting, and we've seen a kind of a reversal here. The calls on Ethereum were smaller last episode. They're now sitting at about 57%. That's actually really positive for Ethereum. We turn across to total liquidations because we want to see how significant sell-offs are in terms of liquidations. The past 24-hour liquidations is $233.37 million. Over that time, 64,942 traders were liquidated. If we look over the past 12 hours, about 85% of liquidations were long. And we can see, using a 15-minute time period, there's been a lot of long liquidations just recently. If you saw the previous episode on trend, which is episode 126, you're not going to be concerned about any of the figures that are being represented here. If you haven't seen the trend, you would have probably sold your holdings. That's why it's so important to understand the trend. Let's have a look at the stablecoin supply ratio. We know a lot more about stablecoins because of this analysis that we've done as a group together. SSR oscillator. We can see these stablecoins are being deployed into Bitcoin. That's a really positive sign. There's strength underneath in the engine of Bitcoin and crypto. We always track psychological safety and liquidations. The fear and greed index today is 20, which is extreme fear. Now, what does this mean and how do we use it? When people get pulled into the market, it's because price is going up and up and up and up and up, and people think, buyers going long, expecting the price to increase, say, this thing can't go down. I'm getting a Lamborghini next week. I'll just come in here and put a whole lot of money in here, and it goes up, and people feel fantastic. And then the extreme greed starts to pile in. And what do the institutions do? They sell it down. And people think, I'll buy the dip, I'll buy the dip. And it comes back up again. And the institutions sell it down. And this structure weakens over time. And that is what we saw here in this capitulation event. What is happening now? People, because of the fear, uncertainty, and doubt, and I've sensed it in the community, there's a lot of people with massive uncertainty and doubt and a lot of fear. They feel that this price could plummet to 20, 15, 10, $0. Some people are saying $0 is a possibility. It's not. But the important thing to realize, if you've been through the trend analysis, you know that this is simply not the case with the probabilities that we have. What is happening now is just like the longs feel extreme comfort and confidence when the market is going up, the shorts feel extreme confidence that the price will go down. That short covering, people when they short, they need to buy to cover that, which increases the price. That's why we get exponential price movements in crypto. The shorts coming in is absolutely required. Let's do a quick analysis of the crypto total market cap. All the coins in the crypto market are trading at $1.297 trillion. We can see the price action here is representative of what is happening underneath the hood of crypto. I've said many times that Bitcoin rules the crypto market. You can see this sort of gold line, orangey gold line, is the line that represents Bitcoin's price action. You can see it here along this axis. That's the current price of Bitcoin. Bitcoin actually moves the entire crypto market. If you look back at past videos, you'll see that happens down to a 1 second mark. This is exactly why we pay so much attention to Bitcoin, to understand its trend. The entire market, this is the market capitalization of every single coin in the cryptocurrency space. We always know price is moving in a wave. It's coming down and then up and down and then up and down. And when it hits resistance, it tends to back off. When it creates support, it tends to head up to the next resistance. We've got structural resistance up here. We need to break that across the entire market. But that will happen as Bitcoin regains strength. And when it does, it's going to happen fast. With that in mind, let's look at the top 7. Bitcoin, Ethereum, Tether, Binance Coin, Cardano, XRP, and USDC. You can see the stable coins. People are basically taking their holdings of crypto and parking them in stable coins, waiting to deploy them. And we know those stable coins are being deployed into Bitcoin. Just a little graph that can help you. This is the relative strength indicator. What happens as relative strength decreases? The power of upward momentum is decreasing. Now, even though price can go up, if relative strength, you can imagine if you get weaker and weaker, but things are getting stronger and stronger, it's just a facade. It's not correct. So this price created a bearish divergence as strength was falling. You can see that the relative strength is actually increasing right at the moment. That's explained by all the stable coins going into Bitcoin. That's yet another reason why we're not too concerned about this. It's really important to understand you cannot pick a top and you cannot pick a bottom, because bottoms only occur after you know that it's a bottom. Let's check out the past 24-hour percent gainers. Axie Infinity doing very well. Flow, Chili's, Bakes, Stacks, Compound Mana. We can see some NFT plays in here. Let's go the other way. Greatest 24-hour percent losses, Synthetics, FTT, KCS, XDC, Atom, Luna, and Rune. Let's look at the greatest gainers over the past 7 days. Axie Infinity, Flow, Stacks, OKB, Luna, Leo, and Chili's. Let's look the other way. What are the greatest losses over the past 7 days? Telcoin, T-Fuel, Theta, Matic, Celsius, Cello, and DOT. When we look at timing, we need to try to gather as much information as we can. One way we do that is look at Binance derivatives, and especially the change in the price of the contract in the past 24 hours. 24-hour trading volume is 49.1 billion. 24-hour open interest is 6.4 billion. Now let's go through and check what is happening under the engine. We can see Axie Infinity, 13%, doing quite well. CHR, Chromia, doing quite well at 39.4%. Now let's look a little bit more deeply into that. What you can do, if you have like a ticker symbol, a coin symbol, you can just throw it into the search area here on CoinMarketCap, and then you can go to this page, and here it will tell you what it is. DeFi, collectibles and NFTs, enterprise solution, platform. And there are a number of things that you can go and look through here. it's really, really good for you to do that. When we get into more timing issues, we're going to look at fully diluted market cap versus market cap. We're going to look at concentrations of ownership. There's all sorts of things that are really cool to look at. But for now, this is good just to give you the path. Let's quickly look through the top coins. Ethereum, currently trading at 1920, is just above structural support at 1909. It has support at 1875 as well, resistance at 1960 and 2020. Let's have a look at BNB, Binance Coin. BNB currently trading at 312, above support at 309, 302.71, and structural support at 291.52. We have resistance above at 318.46 and 327.48. Let's have a look at Cardano, ADA. ADA is currently trading at 123.09, above structural support at 121.27 and support below that at 119.14. It has structural resistance above at 124.11 and normal resistance at 125.60. XRP is currently trading at 60.10. It has support below at 58.55 and structural support at 56.94, resistance above at 61.36 and structural resistance at 63.17. DOGE is currently trading at 18.945, pretty much at support. There is another level of support below at 17.980 and 16.539, resistance above at 19.990 and 21.095. Let's have a look at Polkadot. DOT is currently trading at 13.118, just above support at 12.911, and a further level of support at $12. Resistance is 14.023 and 14.748. Rule 56. Don't seek tops or bottoms. The problem with a top or a bottom is that we never know when it hits because we only understand after the fact that it's the top or the bottom. There are always hints to tops and bottoms that we pay a lot of attention to. That's why the trend analysis in episode 126 is so critically important. We're trying to figure out tops, bottoms, consolidations, all of those things. It's vital to understand it. When people ask me, is it the bottom? What do I do? Do I wait till it goes down? It's really important to understand because we don't know where the exact precise bottom is until after it's been hammered in. The best thing that we can do is just buy at support. When you buy at support, it's very, very profitable. Let price come to you. Don't worry about racing into a particular trade. If you're an investor, you know you will always become a trader every time that you buy or sell. Let's explain that a little bit more with Link, Chainlink. Link is currently trading at 16.208, just above support at 15.900 and 15.462. It has resistance above at 16.698 and 17.209. Now, how do we put things into practice? If you were a long-term believer in Link and you wanted to buy into Link, and there's many in the community that do, think about this. When you buy when the price is going up, you always know price is moving in a wave. It's going up and coming down, going up, coming down, going up, coming down. We know that the basic trend has been hammering out a bottom. We know that things are looking good for Bitcoin, even though it may not seem that way. For example, if you manage to buy down here, and I know we can't pick tops and bottoms precisely, but just look at the idea of buying down at support, at support, at support, at support, at support, at support. all of those support buys lower your overall cost, your buy-in cost, your average cost. If you manage to sell up here and you bought, for example, around here, that's a 36.8% increase in value. Now, let's say that you only wanted to buy when it was going up. So you said, oh, I'll buy it. It's going up, it's going up, it's going up. Okay, now I'll buy the dip. So you buy, say, there. Look at the difference in percentage terms. It's really important to understand these particular relationships between percent and buying at support. All institutional investors know the price is biased downwards, so that's where they seek to do their business. It's really helpful if you just keep that in mind. I would always suggest that you dollar cost average in at support levels, and we always are looking for tails, these sharp spikes downwards, because we know the price is negatively biased. It can come down very fast and reflect up very quickly as well. So think about, if you wanted to get into Link, place a buy order, and it really depends on how much money you have, and please be aware of tax implications, how long you're holding it, your risk, what you do with the money. There are all sorts of things that you have to be aware of. But if you wanted to get in and you're committing money to it, look at buying at support levels. Please do not buy at market. Don't just buy what sellers want you to pay. You always suffer dilution that way. You don't want to do that. Let percentages work for you, not against you. A few episodes ago, we talked about there's no elevator to success. You have to take the stairs. Crypto feels like this. It's incredibly volatile. It's open 24 hours a day, 7 days a week. You don't get rest. If it turns red, you've got that stress. How red does it get? But it's really important to understand there are handrails that you can put up here. So this is not as scary as it appears. One of the keys is to buy when price is red. The redder, the better. We know that we're in a bull market. The trend is maintained. We're about 50% of the way through this particular bull market cycle. With those things in mind, we have a great degree of confidence that upward price pressure is coming. It doesn't feel like that right now, but it's supposed to feel like that. This is how institutions play their mental mind games with retail investment. The best way of explaining it, we are down here in the extreme fear. It is literally extreme fear zone. When you're very happy and when you see the prices going up, that's when you should be worried. When you're down here, as you grow in strength and confidence and understanding, these are the ideal places to buy. I am buying right now. And I know some people don't have any cash left over to buy, and I understand that. And that's a frustrating thing to be in. But always remember, this is psychological success and safety for the shorts. Just like this is psychological safety for the longs. Most people end up buying at the top and selling at the bottom. The shorts do exactly the same thing. The shorting opportunities were actually around here, not here. If you're going short, please be careful. Warren Buffett, at the age of 90, is perhaps one of the world's best investors. His net worth is around $100 billion. He really knows what he's talking about. He says, be greedy when others are fearful. You think about the crypto market now. Are others fearful? Yes, they are. They're actually terrified. People are terrified because they've seen this big descent in price and they think it's all over. It's not, but they think so. And this is the reason why I go through so much data with you. Try to cram everything I can in there to help you to understand. Right now, I'm feeling incredibly confident in the market. I don't feel incredibly confident when the market is up here, exhibiting extreme greed. I get really worried when that is the case. And we'll get there, and I'll be worried. And you'll say, Ken, what are you worried for? And I'll say, do you remember down here when everybody was freaking out? Now I'm freaking out. Anyway, we look forward to that. I know a lot of people have lost money. That money can be remade and turned into profit. Don't worry about it. If you're not using leverage, you always have the opportunity to rebuild. Please be kind to yourself. Don't worry about mistakes and errors. You don't have any. They're just lessons to be learned. It's all about gathering knowledge. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Please say hi and let me know where you're viewing from. And if you have any questions, I always love to get questions from the community. I'm here for everyone. Whatever your question is, please let me know. If you'd like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to YouTube. Join us on Facebook and Discord, and follow me on Twitter, or just take your pick. All of these groups are free. Please always remember, crypto is volatile. Prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.